Welcome to our channel. Today we have discussed about finance and management MCQs. First, basic objective of finance and management is blank. A. Maximum of profit. B. Maximization of the shareholders' wealth. C. Insurance financial discipline in the form. D. All of this. The answer is option B. Maximization of shareholders' wealth. Second, financial structure refers to blank. A. Short-term resources. B. All the financial resources. C. Long-term resources. D. All of the. Answer is option B. All the financial resources. Third, the market value of the firm result of blank. A. Dividend. B. Working capital. C. Capital budgeting decision. D. Trade between risk and return. The answer is option D. Trade off between risk and return. Next. Fourth, cost of capital is blank. A. Lesser than cost of debt capital. B. Equal to last dividend paid to equity shareholder. C. Equal to dividend expectation of equity shareholder for coming year. D. None of the above. The answer is option D. None of the above. 5. The appropriation objective of enterprise is A. Maximization of sales. B. Maximization of owner wealth. C. Maximization of profit. D. None of the above. The answer is option B. Maximization of owner's wealth. Next. C. 6. The job of a financial manager is conformed to A. Raising fund. B. Management of cash. C. Raising of funds and their effective utilization. D. None of this. The answer is option C. Raising of funds and their effective utilizations. There is a job of finance manager. 7. Financial decision involve A. Investment financial dividend decision. B. Investment financial and sales decision. C. Financing dividend and cash decision. D. None of this. The answer is option A. Investment financial and dividend decision. Next, we have discussed about financial management MCQ of financial statement analysis. Let's start. First, dividend payout ratio is option A. Profit after tax capital. B. Dividend per share divided earning per share. C. Preferential dividend divided profit after tax. D. Preferential dividend divided equity dividend. The answer is option B. Dividend payout ratio is equal to dividend per share divided earning per share. Second, a current ratio is less than 1 means A. Current liability less than current asset. B. Fixed asset greater than current asset. C. Current asset is less than current liability. D. Share capital greater than current asset. The answer is option C. Current asset is less than current liability. Third, a firm has capital 10 lakh, sales 5 lakh, gross profit 2 lakh and expense of 1 lakh. What is the net profit ratio? You have to remember net profit ratio formula is net income divide sales multiplication 100. So that will be net income is equal to gross profit minus expense. You will get net income. 2 lakh minus 1 lakh, you will get 1 lakh divide sales is a 5 lakh, multiplication 100. You will get answer is option A, 20%. This is a solution of your MCQ questions. MCQ number 4. Supplier and creditor of firm are interested in A. Profitability position, B. Liquidation position, C. Market share position, D. Debt position. The answer is option B. Liquidation position is interested of the supplier and creditor in the firm. 5. Which of the following statement is a correct? You have read about all. This will be answer is option D. Lower debt minus equity ratio means lower financial risk. 6. 80% of sales 10 lakh of the firm are on credit. It has receivable turnover of 8. What is the average collection period? 360 days a year, and average debtor of the firm. In this question, you will remember average collection period formula and average debtor of the firm. Average debtor turnover ratio is equal to credit sales divide average debtor. In this formula, you have mixed the debtor turnover ratio. Credit sale is a 10 lakh 80%. Credit sale is 8 lakh divide average debtor is equal. In this sum, you have this. So total sales is a 10 lakh. Credit sale is a 80% of total sales is a 8 lakh. Debtor turnover ratio is a 8. So 8 is equal to credit sales 8 lakh divide average debtor. So you will get the answer is a average debtor is a 1 lakh. Next, average collection period formula of number of the year divide debtor turnover ratio. Number of in the year is 360 days divide debtor turnover ratio is 8. You will get the average collection period is a 45 days. In this question, his answer is option A, 45 days and 1 lakh average debtor. Next, 7. In response to market expectation, the credit balance have been increased from 45 days to 60 days. This would be result is option A, decrease in sales, B, decrease in debtor, C, increase in bad debts, D, increase in average collection period. At the time the increase the days, that will be average collection period would be increase. The answer is option D. 8. ABC Limited has current ratio of 1.5 is 1 and net current asset of 5 lakh. What are the current assets? The answer is option C, 15 lakh. You will find how this answer. It will be, you have put the formula current ratio is equal to current asset divided by current liability. You will get the answer. First, current ratio is a 1.5 is equal to current asset divided by current liability. Current asset is equal to 1.5 multiplication current liability is a current liability. Next, net current asset is a 5 lakh. This same formula of net working capital is equal to current asset minus current liability. You will put the current asset is equal to 1.5 current liability minus current liability. 1.5% current liability minus 1 current liability. You will get 0.5 current liability is equal to 5 lakh. After then, current liability is equal to 5 lakh divide 0.5. You will get 10 lakhs. You will put in the formula of current asset 1.5 multiplication current liability. Current liability is a 10 lakh multiplication 1.5. You will get the answer is option C, 15 lakhs. 9. XYZ has an 8% return on total asset of 50,000. Has net profit ratio is a 5%. Find out sales of fund. You have to remember total return on total asset formula is equal to sales divided by total asset. You will put in the formula the net profit ratio 5%, 0 point is equal to sales divide total asset is 15 lakh multiplication 15 lakh is 0.5. You will get the answer is option B, 2,50,000. 10. XYZ has debt equity ratio is 1.5. Compare the 1.3 industry average. It means there is a firm has A, higher liquidation, B, higher financial risk, C, higher profitability, D, higher capital employed. The answer is option B, higher financial risk in debt equity ratio is a greater than industry average ratio. 11. Two mutually exclusive projects with different economic lag can be compared on the basis of A. Internal rate of return, B. Profitability index, C. Net present value, D. Equivalent annuity value. The answer is option D. Equivalent annuity value. Thank you for watching and like the video and share to your friends to help their examination. Thank you.